My dear children, today in this module, we are going to study the second method, that is written down value method. As we know, depreciation is the decline in the value of assets. Mainly there are two methods of charging depreciation. They are straight line method or fixed installment method, and second one is written down value method. Written down value method is also known as diminishing value method or reducing value method. This method has been developed to remove the shortcoming of straight line method. Equal amount of depreciation is charged every year under straight line method. The method is criticized for showing the disfavor to final years of the life of the assets. During final years, repairs and maintenance charges are more, but the depreciation is the same. It shows that the final years are overburdened with charges. Diminishing balance method was developed to remedy the weakness of the straight line method. Under the diminishing value method, the value of the assets upon which depreciation is to be calculated goes on diminishing. So, the amount of depreciation to be charged every year also goes on declining. For example, if a machine has been acquired for rupees 1 lakh and the depreciation is charged at the rate of 10%, according to written down value method, the depreciation to be charged may be the cost price, that is 1 lakh into 10%, that is 10,000 is the first year's amount. Then to calculate second year's amount, deduct the amount of depreciation from the outstanding amount. That is 1 lakh minus 10,000, that is 90,000. 90,000 into 10%, that is 9,000 is the second year's amount. In order to calculate third year's amount, subtract second year's amount from the outstanding amount. Then the outstanding amount is 81,000. Then calculate the depreciation. 81,000 into 10%, that is 8,100 is the third year's depreciation. In order to get fourth year's depreciation, subtract third year's depreciation from the outstanding amount. That is 81,000 minus 8,100, that is 72,900. That 72,900 into 10%, that is 7,290 is the fourth year's depreciation. This is the method for calculating depreciation under written down value method. Under written down value method, the amount of depreciation is not fixed. Then depreciation is charged on reducing balance. Then it is also known as diminishing value method or reducing balance method. It is based on the assumption that benefits from the assets go on diminishing with the passage of time. This method is widely accepted by Income Tax Act. Now we are going to study the important advantages of using written down value method. Then first one is easy calculation. Calculation of depreciation is very easier as compared to other methods of calculation in a straight line method or annuity method, replacement method, etc. Then depreciation is calculated every year on the opening balance of the asset. Then depreciation on addition is separately calculated. Then second merit is balanced effect on the profit and loss account of the different years. Then in initial years, depreciation is more and maintenance charges are lesser. In the final years, depreciation is lesser, but repairs and maintenance charges are more. So, every year bears the charges almost the same as regards depreciation and maintenance. And the third one is approved method by income tax authorities. This method is most suitable and it is very appropriated by the income tax authorities. Then another important merit is logical method. It seems logical even to layman that the value of the asset goes on diminishing year after year. So the depreciation should be charged on the reducing balances. The last method is suitable for assets having long life. This method is suitable for those assets which have long life. It is also suitable for those assets where additions and extensions are common feature, such as land, building, plant, machinery, furniture, etc. Next, we are going to study the important demerits or limitations of using written down value method. Then first demerit is the value of the assets cannot be reduced to zero. It is very difficult to determine the rate by which the value of the asset could be written down to zero. Then second one is no funds for replacement. Though depreciation is charged every year, but the amount charged is retained in the business and used in the routine business operations. At the time of replacing assets, the firm has to bother for making the arrangements of funds, although it has charged depreciation every year. The third point is loss of interest. The amount charged as depreciation is not invested outside the business, so no interest is received. In certain methods, the amount of invested outside the business in securities and interest is received. Then next important demerit is higher rate of depreciation. The rate of depreciation in this method is very higher because it will require longer period to write off the assets. If the rate is lower, the assets may become useless earlier. And the last important demerit is unequal burden of profit and loss. The amount of depreciation goes on declining year after year, whereas the asset is used equally by every year. These are the important demerits of using written down or diminishing or reducing balance method.